Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And okay, so we've gone into the housing market a million times before. We've also gone into Wells Fargo, and there are dozens and dozens and dozens and dozens and dozens of scandals that have happened just in the past 2 years alone. Yeah, well, guess who's back in the news again? You guessed it, Wells Fargo and the housing market. And, you know, I can't imagine how many more times we can be vindicated. I wish we weren't. I wish we were wrong. But let's look at this article from Bloomberg, which says, Wells Fargo is planning its first post-crisis mortgage bond. And as it goes into, Wells Fargo & Co. is planning its first post-crisis offering of bonds tied to U.S. home loans without government backing, according to people familiar with the matter. The $441 million non-agency bond will include top portions, which will be rated, of course, AAA, said the people who asked not to be identified, citing lack of authorization to speak publicly. The sale will be finalized next week. Wells Fargo Chief Executive Officer Tim Sloan hinted over a year ago that the lender planned to originate a non-agency securitized mortgage offering in the near future and help kickstart the market, which cratered in 2008. Gee, you think? And I quote, the next generation of private label RMBS credit generally has been hard to source, given the sparse participation by originators and banks, said Neil Garble, senior portfolio manager and head of trading at Semper Capital. Wells Fargo entering the market will likely be welcomed by investors as it is another potential source for this type of paper. Wells Fargo was one of the top issuers of private label residential mortgage-backed securities in the run-up to the financial crisis. More than $1 trillion of mortgage bonds without government backing were issued in 2005 and 2006 each, according to SIFMA. Issuance of private label RMBS has hit a post-crisis high of $75 billion this year, with no sign of slowing down due to heavy investor demand for non-qualified mortgage, non-QM, transactions. These deals can include non-prime or non-standard loans. Wells Fargo's re-entry into the market was widely anticipated and is considered a positive for the redevelopment of the private label RMBS market. JP Morgan Chase & Co. is the only other large pre-crisis lender to re-enter the market when it started issuing RMBS in 2013. And we gotta keep in mind, looking at this other article here, just a headline, Wells Fargo sued by German agency for $160 million in CDO losses. And this article, of course, is from 2013. Another $11 million. Wells Fargo settles CDO case for $11 million in 2011. And I mean, we could go back and into 2007. It's hilarious and horrible at the same time, because it's like, first of all these banks are bankrupt. Their cash deposit ratio, which John has looked into, have clearly showed that they are incredibly bankrupt. And then you see the return of things that we saw in 2006, 2007, leading up to the crisis. And you got to wonder, are people crazy enough to buy into this? Are people crazy enough to believe in this? I mean, mortgage-backed securities, we've recently heard of subprime mortgages again. We've got CDOs, and we got credit default swaps, and of course collateralized debt obligations are a package of, let's say 100 mortgages together, and 95 are terrible and 5 are good, and then they rate it AAA, like they kind of mentioned in the article regarding the mortgage-backed securities. Folks, when is this going to end? We are seeing a massive bubble popping up, no pun intended, in countless cities across the United States, Canada. BMO is doing similar things in Canada. I mean, John, what do you think about this madness?
Well, I think we should just take a look at the stats there from Statista, showing the actual issuance of real estate mortgage-backed securities, RBMSs, since the crisis. And of course, you saw, 2005, 2006, and 7, you saw massive run up in these issuances of these back loans. What really it is, these derivatives, is a way of the banks to remove their bad debt off their balance sheets. They put it into special purpose vehicles or special purpose entities, and then what they do is they of course tranche them into this mortgage-backed securities again. But as they do these special purpose entities and vehicles, that's special or corporations that they hide basically all the mortgages into in order to run them off of their books so they could they did that with Greece. Goldman Sachs did that with Greece so they could join the European Union back in the time. Look at what happened to Greece, how terrible their economy was, of course. It was all accounting fraud by the big major accounting firms and Goldman Sachs. But take a look at this chart, Josh. It just continues. There's just a tiny little bit of a slowdown, of course, in the markets, but they're still issuing mass amounts. Just over since 2012, they've been issuing, we're looking at 5 or 6 trillion issues of these real estate mortgage-backed securities. So you're seeing they're not, they're slowed down, but they're still issuing mass amounts of them. And of course, here in Canada, what we're seeing is an interesting, slowdown in the issuance. When you look at the chart, you would think that they would ramp up the issuance of it, but of course the government has been in there regulating, so they can't issue as many anymore as they did at the top of the game. That really blew up the world economy. But they're still on the game. They're still issuing all of these fake derivatives, that they're pushing off their books. They're selling it to investors, so they get a little bit of money back on these until it dries up, until there's defaults in the packages, and that's when the whole collateralized, the whole debt tranching is falling apart, because you're looking at the lower tranches are not giving you any income anymore. That's what happened with so many. You saw all those lawsuits. There was about 5 or 6 big pension funds in Norway that blew up because of this whole derivative scheme.
And I would say that those lawsuits weren't much for those banks, but we got to remember they have no cash, so there's that too.
It's payoff. But you got to pay off, the mobsters, Josh.
Of course. And speaking of mobsters, I wanted to ask you a question, John, because we have they keep talking about how it's not government backed. Now, what's the difference between non-government backed and government backed, other than the government is stealing people's money to pay off fraudulent debts? And I mean, speaking of organized crime, I mean, what is the difference?
Well, non-government backed is just without the insurance of, for example, the CMHC. Actually, in Canada, the BMO issue was backed by the CMHC, so it was actually insured by the government to take the hit, and that's what happened with Fannie Mae and Freddie Mac. They were the insurance agencies in the States, and that is what the difference is between a government-backed and a non-government-backed, because they have the government in the back saying, we'll pay you off, we'll make sure that we'll pay you if you falter. And of course, all those mortgages blew up at the same time. There was no way they could pay them off, and of course they faltered massively on it. And then of course you had the banksters created the credit default swaps to then again bet against all the terrible investments that they made. So it's just a massive scheme. They said that derivatives would be great, way to create more liquidity into the world economy. Meanwhile, you had guys like Warren Buffett that we have, of course, that owns Wells Fargo. He said that the derivatives is, of course, a weapon of mass destruction. He should probably tell, as a shareholder in Wells Fargo, he should probably tell them that they're issuing a weapon of mass destruction here, Josh.
By their logic, they can just print money out of thin air as much as they want to pay off their own debts. But of course, that's not how it works, because in the end, they're just going to create more debt. So, I mean, I've seen some comments on recent videos of ours. Well, why don't they just print the money? Well, no, that's a whole problem.
Well, you can, but you end up in a hyperinflation. Yeah. So, yeah.
Well, and we've seen that happen in a few places. Like almost every fiat empire that's crashed has dealt with either massive inflation or hyperinflation or stagflation as well. There's a few different variations of failure, but it's always a failure. And I wanted to ask you, John, so as we go forward with this, where do you see this leading? Because a lot of people are concerned, like, we're going to see another crash, and we're seeing these massively bubbled up markets in places like Vancouver, Toronto, in places like San Francisco and Seattle, and throughout the United States, New Jersey, New York. I mean, this is not looking good, and you got to think, like, where is this going to lead this time? I know the fundamentals are off the table due to the level of manipulation in the monetary system as well as the markets, like I say so often here at WAM. but nonetheless, the crash is going to happen. We just can't put a date on it. So is this a major telltale sign of what's to come, John?
Oh, yeah, it definitely is, Josh. And I'm trying to just look at, here's the article that just was put out by CNBC. And ex-Fed Chairman Alan Greenspan came out and said, we are in a bond market bubble that's beginning to unwind. That is the guy that actually started this whole thing, started the mass manipulation of the central banks. This is the guy that was on the forefront, creating the dot-com bubble, Josh.
Yeah, let's remember, this article is technically from March of this year, but nonetheless, it's been coming up in the news a lot lately. I've seen this coming up on my newsfeed, this article, a few times, because I think a lot of people are taking another look at it, because, Alan Greenspan's a terrible person, and extra terrible because he actually knows what's going on, and he's well aware about how Keynesianism crashes economies, how this massive amount of debt always becomes so heavy you cannot sustain it anymore. But he still pushes the idea anyway, and was when he was at the Federal Reserve as well.
Oh, yeah, of course. And if you take a listen to the cutout interview that he had with the Council of Foreign Relations, he talks very greatly about gold and how good it is to have some kind of accountability mechanism. But
especially when you're in the government or central bank, because you can rule over people a little bit longer.
Yeah, no, gold was just there to be an accountability mechanism. When you printed too much money, that they actually could go in and say, I want my gold now because the money is getting worthless. So that was a kind of a gauge for these idiots that, maybe you shouldn't print a whole bunch of money. But anyways, take a look at this article here from today from Reuters. It says, bond yields surge in U.S. Treasuries sell-off, stock sinks globally. What you're seeing now is you saw after the Fed raised their interest rates again, you saw a massive jump up in bonds, in the actual yields in the bonds. So you're seeing that. So the more the yields goes up, the more you got to pay for your debt, the more losses bondholders take on top of that, Josh. So there's a lot of issues here that's happening. Meanwhile, you have these bozos, issuing more and more of these derivatives on top of that debt. Of course, we can take a look at another derivative, Josh, that is the CLO, and that's a collateralized loan obligations, which is corporate debt and corporate bonds that is getting issued and packaged the same way as the mortgages. And when you look at here in Europe, you have about 6 billion in new issues currently, just the first quarter of 2018, and then in the United States you're looking at around 6 billion in 2018. But look at all the other issuances, of course, on top of that.
I want to actually mention something from Wells Fargo's own website at wellsfargo.com. It says here, CLO administration and agency services, and then it goes on to say Wells Fargo specializes in collateralized debt obligation and structure finance products. We work with the issuers, asset managers, investors, bondholders, and regulatory agencies to provide services for a variety of alternative investment products, such as trustee and paying agent, portfolio administration for CLOs and other financing and investment structures, custodian for securities and bank loans, calculation agent, exchange traded commodity index trust services, back office outsourcing, trade settlement and cash reconciliation, collateral agent for bank financing facilities, syndicated bank loan administration, financial reporting services, data services for bank debt portfolios, full administration agent services for direct lending. So, they are on their website offering these quote unquote services. I consider it rape, but whatever they want to call it.
Well, I would say Wells Fargo is back in business, as they said. They're finally out there getting their feet wet again in the in the derivatives markets after mass calamity in the residential. So I guess they're losing all those customers, Josh, left, right, and center. So now they actually have to, go after, because it was recently we were talking about how they were losing all their more residential customers. A ton of people are not getting mortgages through them anymore. And of course, there's a lack of refinancing now, because now people have gotten into so high debt that they can't pay it back. So the refinance rates are going down. And then that's a great time to start issuing these bonds and get back into the market, Josh.
Wait a second, John. Are you saying that people don't like their cars being repossessed after they're given fraudulent car insurance that they didn't ask for, or perhaps getting their homes repossessed in one of the other fraud cases of Wells Fargo, or having fake bank accounts where they're just indebting them and putting huge debts on their shoulder? You mean people don't like that?
Did you say that the house would getting possessed possessed by Wells Fargo.
Yeah, exactly. And Warren Buffett and his ice cream. Anyway,
Yeah, no, it's insane, Josh. It's just crazy and stupid. And of course, I was listening to Max Kaiser the other day, and I loved how they were talking about zombies at the Kaiser report, and they mentioned something very interesting, which is what's called zombie corporations. They were talking about zombie banks. We kind of mentioned it here too, where there's banks they're basically bankrupt. They're just getting fed, and taking off all their bad debts off the balance sheets. That's why the Fed has 1.2 trillion. Don't get me wrong. Like, I don't remember the exact number, but $1.2 trillion in mortgage-backed securities on their balance sheets because of the terrible zombie banks. But then now they created zombie corporations, and there was a recent research that came out that over 15% of the corporations in the United States is zombie corporations. That means basically that their profits can't pay their mortgage, their loans that they have. So they're basically have run out of money, Josh. They don't have any money left, and that's what we see worldwide now. It's just this Ponzi scheme getting created, of course, by the fake issuance of currency, by the central bankers. And look at what is fueling this also. You saw the stop of QE, Josh, but this is very interesting. Meanwhile, they stopped the QE. What is the current deficit of the United States? Well, it's about 1 trillion currently, and well, what can you do with that? You put it. Remember, we did the usury report where we talked about fractional reserve banking. Well, they can put that $1 trillion into the banking system and create $10 trillion more in loans and mass amount of expansion in the currency supply. So they don't really need QE right now. They have, I don't know what you call it. You call it fiscal monetary policy or something through the government, not through the central bank. Issuing and then buying up all the debts. The Central Bank of Japan has basically bought up everything that's bonds from the government because nobody wants the garbage. You know that the Japanese government is bankrupt, and then of course they had to buy up most of the ETFs as well. They just keep on buying everything because what is happening? They created this zombie world where there's nothing left that is alive anymore, that is actually producing something of value and getting out there. Yeah. It's all dead, Josh, and there's nothing left to feed on.
Yeah, well, and on comes the debt subservience. You can call that a zombie apocalypse as well. I mean, instead of being dependent on eating brains, you are dependent on the banks and the governments and these organized crime rackets, and we have a multi-trillion-dollar derivatives bubble. And when does it end? I mean, we are at a point in time where people are so subservient, and we have more subservience to come as these massive banks. And well, they're not as massive as they appear, as a facade is, but these massive banks and the governments around the world centralizing people into oblivion, putting them in debt servitude, setting up the future so that when the crisis happens, they have everyone on their knees. And folks, we need to break free from that. I don't know how many more ways to put it. We as individuals need to break free, decentralize, rule ourselves. We need to be self-sufficient. We need to be financially responsible and educated, as responsibility is a hallmark of freedom itself. And of course, food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Gold, silver as wealth insurance to protect your purchasing power. This isn't investment advice. This is just our opinion but look at history. And also look at decentralized cryptocurrencies that have fundamental value. Do your own due diligence. Be smart. John, let's wrap this up. Bottom line as we close off this report.
Yeah, fundamental value is the key here, Josh. And when you look at the fundamental value of this mortgage-backed securities, there's nothing really behind it. It's just your bank are using you as a debt payer to their bank, and they're just shipping a little bit of your interest that you have to pay back. And then suddenly when you fail to pay, that's when it all goes bust. There's no fundamental value in these derivatives. It's just full of air. And it's about to deflate heavily the whole market, and with it you will have the mass collapse of about 600 trillion official derivatives, but some say 1 to 2 quadrillion in total derivatives around the world. There is been created so much financialization in the world. Nothing is really live producing anything of value or getting anything back to the consumers or to the market. All that it is, it's just a mass financialization to keep the system afloat, because that's all that it is. When you can't make any more money with going out there and doing some good work, getting into that and offering something of value, you just have people making money with money. That's the death of the economy. This is the complete death of the economy, and that's what we're seeing right now all around the world because it's been heavily financialized and it's falling apart in seams.
Absolutely. Well, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here at WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line yes, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Thank you.